Now, as discussed in my previous video about concept and accounting of bank incoming and outgoing payment in SAP S/4HANA, the link for which is shared on the screen and even you can find it in the description. Now, in today's video, I will explain the concept and accounting for bank reconciliation in SAP S/4HANA. So let's move. Hi, my name is Mohammad Muzammil Khan and I publish video regarding the SAP Finance. So if you are interested, kindly subscribe my channel to stay updated about the latest videos. First, I'll explain what is bank reconciliation, why it is necessary to perform the bank reconciliation, and when we have to perform the bank reconciliation. And after that, I'll show you the accounting process for the bank reconciliation. So let's start with some basic definition that you must know. Number one is bank statement. What is bank statement? Bank receipt is the cash receipt and withdrawal that is done by the business during the period and is certainly maintained by the bank. Now the cash book. The cash book is the accounting record of what the business think they have in the bank, and it contains the cash inflow, that is debit, and cash outflow, that is credit. So ideally they both should reconcile with each other, but in reality they won't. Here comes the bank reconciliation in picture. We have to perform the bank reconciliation at the period end to figure out the reason why our bank statement balance or the cash book balance won't reconcile with each other. So there are few basic reasons. Number one is omission. Omission is the transaction or record that is maintained by the bank and business is not aware of those transactions, that include bank charges, missing receipt, bounce check, and interest received. Now the second reason is time difference. What is time difference? So two common time differences are outstanding check and deposit in transit. Outstanding check are the checks that are issued by the business to their suppliers over the period and they are not presented to the bank in the same period or might be presented in the following month. So that's why they are recorded in the bank in the following month, while the business recorded those transactions in their current month. Now the second one is deposit in transit. Deposit in transit are the cash receipt or the check receipt by the business and they are recorded by the business during the month, and due to some processing time the bank has recorded those checks in their bank statement in the following month. So for the period there is a difference between the bank statement and the cash book. Now the last reason is error. So there might be a chances that the accountant has forgotten or entered some wrong amount in the cash book. So first you have to ask your accountant to figure out the error in the cash book, and if you are sure that you haven't made any error in the cash book, then you go and ask the bank to rectify or correct the error in their bank statement. Now the last question, when to perform the bank reconciliation. There is no certain defined time interval to perform the bank reconciliation. A business might perform it weekly or after every 15 days or monthly, but it should be performed before making the financial statement for the period so that your financial statement would reflect the correct picture of your bank or cash and it will be reported correctly to your management. Now let's continue with the accounting process of the bank reconciliation. Now, after posting the incoming and outgoing payment in bank subledger, which I have performed in my previous video, you can find in the playlist. On the screen, you can see the accounting for them. Now, the bank has provided the account statement of your bank for a period which you have to enter and perform the bank reconciliation process for it in SAP S/4HANA. And then it will create the bank subledger and record the entry in bank main ledger for all the reconciled amount. For incoming payment, the accounting entry is debit bank main account and credit bank incoming account. And for outgoing payment, the entry is debit bank outgoing account and credit main bank account for all the reconciled item. Now I am leaving the screen to show you the complete T account for all the 3 bank GL accounts. On the screen you can see after the bank reconciliation process, the reconciled balance from the bank subledger are cleared. Thank you for watching the video. Hope you found it informative and interesting. In my next video, I will demonstrate the front-end process of manual bank reconciliation in SAP S/4HANA. So if you are interested, kindly subscribe my channel and stay connected for the latest videos. And please don't forget to like and share the content if you found it informative. Happy SAP learning.